It is Monday, February 10th, 2020. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was a very early, although short, get your ass kicked at Jiu-Jitsu Monday. Did a lot of side control, some arm bar stuff from the side control. I really liked it, honestly. It was a really interesting setup because it allowed for 3 different directions that you could get that particular armbar in. Or a armbar in, I shouldn't say a particular armbar. And it also facilitated the opening for just the straight up traditional armbar. And also I guess I could probably have worked it into a 180 armbar if I really tried. But yeah, we had an interesting morning. Today we had a little bit more people in there than normal. It wasn't just me and the one other guy, or the coach, I should say. Just doing the thing in the morning. It was we had an additional pair of people in there today, and so yeah, it was actually. Wait a minute. No, there were 5 of us this morning. It was interesting. So we had at least two pairs of people to do stuff at any one time. And like I said, we just worked that one position, but we did work it a couple variations of ways. And like I said, I enjoyed it quite a bit because it was just a lot of reps. A lot of reps. And there's some stuff that I feel like I don't get enough repetitions of, honestly. And I really kind of felt it this weekend. I'm actually nursing 3 injuries now. 3 separate injuries, although 2 of them are on the same side of my body, which is weird. I'm sure they're all related to the initial injury in my back. So, I'm just trying to recoup it, and I had to get in a little bit of time on Sunday, and I got a little bit of time in on Monday, but Sunday was awesome. Or I don't know, kind of awesome. It would have been even more awesome if the people that I was doing as well against were of higher rank, but that's okay. I'll take the victories where I can get them. They're so far and few in between at this point that, you gotta take them where you can get them. But yeah, I rolled with a gentleman yesterday, and I kind of ran him over. I felt a little bit guilty afterward, but it went away. Mostly because the ways that I got him. I did try and work on just my technique, and rather than really impressing upon him. I did let him have plenty of rope to hang himself with, and the opportunities that I felt where I could make something really cool happen, like a nice sweep where I completely flipped him over or something like that. That felt pretty good, when I was able to get those in, and I got a couple of them in. I got 2 good sweeps on him, and then I think I subbed him 4 or 5 times. And, like I said, I wasn't moving particularly fast, though. And one choke I seem to be getting a lot of people in lately is a zipper choke. It's just such a default for me to reach for anymore that, I've had to catch myself a little bit, and it's all right, wait a minute, is this the best thing, or could I maybe direct this around to an armbar maneuver? I think I want to do that instead. But like I said, that zipper choke, man, I get that lapel in my hand, and I just want to pull them in and get the other hand on the other side of their neck and just pull it in tight. And so I actually got somebody that was ranked higher than me, although she was a little not as strong as I am. I mean, because obviously, I'm a guy, but I outweigh her by 50 pounds. So, the experience differential was just that the fact that I caught her in a zipper choke, and she even commented on it. She's like, "Really? A fucking zipper choke?" Like it's one of those that you watch out for, especially if you're in somebody's guard. And like I said, I had her in my guard, and it was just like, okay, I've got the one lapel, and I kind of pushed her off to I pushed the lapel out, like I kind of straight armed it over to one side, and I leaned over to that side, and then I just swung my arm up over her head and grabbed her gi behind her neck on her left side, and then pulled it tight, and yeah, it was just funny though. A zipper choke, like I haven't gotten caught with one of those since I was a white belt, one of those things, But yeah, I still get taken by the zipper choke occasionally. It really depends on who's delivering it, but it's one of my favorites to deal out, and I certainly relish every one that I get. But yeah, so it was a nice short kind of open mat, a little more open mat than normal. But we did work at the that side control quite a bit, and I, like I said, got a lot of reps in, and had a chance to really feel out the technique and work it with my partners. And we swapped partners quite a bit, so I had an opportunity to do it on two people that were vastly different in their body shape and size. So it's kind of a good thing to do, especially if you're used to dealing with people that are your size or slightly smaller. Experiencing people that are taller or bigger, bigger as in heavier weight. Good thing. And with the guy that I was working with today, or one of the guys that I was working with today, I rolled with him at one point, and he has a lot of trouble getting his legs fully around people during like a guard position, and even worse, I can't get my legs wrapped all the way around him. And so, if I'm trying to lock him in my guard, it's really, really, really tough. But I manage, and it's mostly because I just put my feet on his hips, in the crook between his hips and his upper thigh area, and kind of trap him in with my knees, and that's kind of effective. Although he has shaken me off at least once, and then you just got to go in for the single leg. But yeah, so I had an opportunity to work through that the site control stuff with him, and he's really, really attentive. He really pays attention to what you're saying. The only reservation I had about working with him is he's bigger, but I think he's used to the fact that he has to compensate for people that are smaller than him, and so I think he's a little bit overly conscientious about putting his weight on people. And, the fact of the matter is if you're on the bottom, part of the reason for avoiding the bottom is you're bearing the weight of your opponent in a lot of positions. So you don't really want to be there. It's not very comfortable at all. And it doesn't matter who you are. But if you are on top, man, you want to oppress your opponent. You want to focus as much weight and as much pressure on as small a spot as you possibly can. Because that'll keep them down, that'll slow them down, that'll give you the opportunities that you need to change your position to a more advantageous one in orientation to your opponent. So yeah, work with people of bigger and different sizes. Anyway, let's go ahead and throw down with some music. And as far as where we're going, we're going to play some body count. And as a matter of fact, I think the newest body count, Carnivore, is going to be coming out March 6th. I gotta tell you, I am looking forward to it. I've heard the single off of it. It's fucking brutal as fuck. And I'm sure if the rest of the album even measures halfway up to it, it's going to be fantastic. It's going to be one of the best releases for 2020. And I know that's a bold statement, but, just seeing what else is around as far as being creative and really far out there, and yet still producing something that is it's just fucking gorgeous. Body Count is it. I'm sorry, kids. It's the truth. Body Count, Ski Mask Way, First Dance, here on Coin Metal. And that was Metallica with Dream No More. I'll tell you what, that's one of those songs that it kind of brings back to mind the whole debacle with regard to this last Metallica album. and I don't think it'll be the last Metallica album like ever. They may get back together to finish their tour or something. I don't know. I was fortunate enough to see them before James had his little alcohol issue, I guess. I don't know. It's kind of odd that it happened after he was on Joe's show. Anyway, so yeah, it was Metallica. Anyway, if you're not familiar with it, there was this big issue with regard to the last album, Hardwired for Self-Destruction or whatever the fuck it... Kirk, apparently he had recorded all of his leads on his phone and then lost his phone. I guess he hadn't uploaded it to the cloud or something, but supposedly all of the lead tracks that he had already worked out for the album were simply gone. And that song really could have used some Kirk leads. Just saying. Anyway, as far as what we're going to get into today, I came across this and I wasn't even looking for it, but it is something that I believe will become a bigger issue as time goes on, and I've said it to a number of people, and I've had all kinds of people from throughout the cryptosphere, however little or whatever expertise, whatever level of expertise they have, telling me I don't know what I'm talking about, right? Well, I've been involved in this shit pretty much since the beginning, and have had an opportunity to see this. I won't say mature. I'll say propagate into what it is today. And the fact of the matter is there is a good deal of immaturity in this space, and there's always going to be some. And this is the fact that you got to consider cryptocurrencies to be kind of like a living organism. And this is one of the reasons why trying to regulate them from the top down as either a corporate or government entity is just fucking silly. There are expectations that people develop about a coin, but it really none of it matters but how the coin actually performs in the wild. Is its network still live? Do people feel incentivized enough to mine it faithfully? Or are they cheating? Or are they just blowing smoke up everybody's ass with their white paper? That's I don't believe that will ever change about crypto. I really don't. I think if anybody ever tries to really make it illegal, even if there's some global governing body that decides to make it illegal for you to create coins and do your own thing with it, they're still going to fail. Not only are they going to fail because it's fucking impossible, but they'll also fail because the organizations themselves will be will consist of people. And people have independent interests. And I don't care how universal we get with the whole UN and their Agenda 21 bullshit and we're all carbon copies of one another, whatever. We're all viewing the universe out of two eyes that are not anybody else's. And so the universe appears as it does to us individually. We experience it individually. And thus we have our own interests. We have our own desires. We have our own wants. And I don't believe that the seeking of some sort of conventional way to do cryptocurrencies is going to do anything but create criminals. And I don't believe that it will ultimately stop people from doing it. I think if anything, it will incentivize people to do it. And anywhere where they experience some sort of economic inequality or a need for some sort of currency that they can transact amongst themselves with, if there's an interest group out there that has an interest that they want to keep kind of separate from everybody else, they'll be able to create their own cryptocurrency and create their own economy around it. And this is not good for anybody. It really isn't. Because the more the economy becomes diffuse like that, the harder it is for us to get anything real done, because everybody's own interest is their own thing, you know? And especially if they're able to create a closed loop system where they're able to keep themselves self-sustaining and moving forward, you really don't want that. It's a lot of disruption that we don't necessarily need. However, there are a lot of interests that do need to be expressed that are not expressed. And there is no entity out there that's going to be able to look at it on a white paper or even a live network and dictate to you specifically that, you know, this is terrible, this is only going to bring bad things to people, this is something good that everybody will get something out of. You know, nobody's capable of defining that. And even if you were to create a network of such people, like I said, I believe that ultimately people will pursue their own interests and they will just go further underground with it. But anyway, so I guess where I'm going with that is that it's not really up to anybody to dictate to us how to use cryptocurrencies. It really is up to the individual to decide how they want to and when they want to. And because of that, no matter how much we may love an individual coin, whether we're talking about Bitcoin or Dash or Bitcoin Cash or Litecoin or any of the others, that it's not really up to us to determine what the value of it is to other people. Now we can come to a rough consensus among the various people that are participating in the network and their own currencies and the relative valuations to the currency that we're talking about. But that again is a valuation, kind of a decision that only an individual in charge of the hardware doing it has the right to say anything. And so anyway, I got this thing. It's on freekeen.com. NH's top crypto payments platform suspends Bitcoin, calling it, quote, worthless for payments. And this is by Ian, so yes, penis. And this is authored February 10th, 2020. As Bitcoin BTC is once again making headlines for crossing the $10,000 price point, the world's premier multi-cryptocurrency real-life payment platform AnyPay has announced they are disabling BTC from their system. Based in Portsmouth, New Hampshire, AnyPay's co-founder Steven Zeller said in an announcement today that Bitcoin was, quote, worthless for payments now that transactions can be easily canceled. What? How the fuck did that happen? Originally, when Bitcoin launched in 2009 and for several years into its life, one of the major selling points that set it apart from other electronic payments like credit cards was that Bitcoin transactions were irreversible. Actually, we had a term for it as immutable, although nobody at Bitcoin Core talks about it being immutable anymore. Continuing on. Once the buyer hit send, there was no way for the buyer to undo it. There was no, quote, authority like a credit card company or a bank that the buyer could contact to have them reverse the transaction. Business owners are very familiar with the concept of the dreaded chargeback, where a dishonest customer can use the credit card company's ability to undo transactions to scam a merchant and receive money back and keep the product. Chargebacks were impossible under Bitcoin, and this was a major reason why businesses wanted to accept Bitcoin. However, midway through its first decade, after its anonymous founder Satoshi Nakamoto disappeared and the development was taken over by others who did not share Satoshi's vision, the newer programmers introduced a feature called, quote, replace by fee, or RBF. The purported reason for this was to allow a sender, after they'd already sent a transaction, to update the associated fee and help it get through the network faster. However, this also allowed them to cancel the transaction entirely, as long as the transaction had not yet received its first confirmation. This RBF feature broke one of the fundamental tenets of the original vision of Bitcoin: irreversible transactions. For a while, this cancellation, quote, feature was only accessible through the, quote, full node Bitcoin Core software, which meant it was relatively tough to use in a real-life payment situation. However, as shown by this video here, now more mobile wallets are incorporating the, quote, feature, which means that accepting Bitcoin at a point of sale is now highly dangerous and increases the risk of fraud. Hence, AnyPay has announced they are no longer going to allow Bitcoin payments on their platform. In a video posted today, Zealer announces that Bitcoin has been disabled on the AnyPay cash register app until further notice, as he's had a, quote, final revelation that it's worthless for payments. This after having seen the new video that shows how easy it is to now commit fraud against real-life payment systems using Bitcoin. While some BTC-only fanatics will be disappointed by the news, the reality is most people don't use BTC for payments via AnyPay's platform anyway, given BTC's ridiculously high fees compared to other more useful cryptos that were designed for payments, like Bitcoin Cash or Dash. Of course, that sounds like a bit of a commercial. And I'm definitely picking up a little bit of a Bitcoin Cash slant to this article, so please forgive me. I didn't select it based on that. I wanted to explore what they had to say about this here payments thing. Anyway, continuing on. AnyPay at a real-life business will usually receive 10% back instantly thanks to AnyPay's Bitcoin Cashback and Dashback programs. I think AnyPay has made the right choice here to protect merchants from potential fraud. It's too bad the BTC programmers forced AnyPay's hand by making BTC less useful over time. Once upon a time, Bitcoin was useful for payments as it was originally intended. Sadly, those days are long gone. Bitcoin BTC may still be the king crypto, but it's not useful for payments. Is it really? But if it's not useful for payments, is it really a currency? Dude, I've got this to say to you. It's not really up to you to decide. And the fact of the matter is the development itself of Bitcoin is in flux. It is in constant flux. And what is currently being experienced is going to create friction for Bitcoin, both in retaining its current market dominance and expanding it. And this isn't a good thing for them, but it's not the worst thing that could possibly happen. But let's check what the comments have to say here. Rob A says, any payment provider that doesn't understand how cryptocurrencies work, proof of work, ensures that a truly decentralized ledger is synchronized worldwide by blocks issued every 10 minutes. Should close doors or now claim to support cryptocurrency, or not claim to support cryptocurrencies at all. Reasonable payment systems supporting cryptocurrencies should A. Support Lightning Network. No, they shouldn't. B. Instruct merchants that if they want to support the base layer transactions to wait at least for one confirmation, BTC, or 3 confirmations for BCH and BCHSV to ensure correct settlement. Still no on off-chain bullshit, but that's just me. Let's see, but obviously this is just FUD to push Bcash anyway. By the way, Bcash just tricks the even longer confirmation times by offering zero-conf transactions. This leads to about 40 double spend attempts per day. As you know what? I checked that site out, doublespend.cash. You know what else it tells you? It tells you which version of the transaction was actually included, and I've never seen one where both were successful in being completed and confirmed. So, yeah, fuck you. I don't care. I think with regard to that there's some sort of network latency thing, that 2 versions of the same block are being verified at the same time by 2 sections of the network, that they've got some sort of latency between them, that both of the versions of the block are being or both versions of the transaction are being counted as valid at the same time, and then being submitted to the same node, and they're like, oh no, gonna have to make a decision which one is right. And again, it could be the product of a number of different issues, and again, it's a latency thing. I think that somewhere along the line, more than one version of the transaction gets propagated and gets come to at one central point, and then both of them show up as a possible double spend. It's like, hey, is somebody trying to gank some money here? And only one version of it works, and it's usually the thing that changes about it is something in the transaction ID itself changes. Like there's a different ID to it. I don't know how all the little details, but about how the ideas come to with the transaction ID, but I know it's like a hash of both the recipient and the sender, or something like that, or their public address. I'm not 100% up on it now, and I haven't had an opportunity to get back to it. I'm going to have to do that at some point. But anyway, so check this out. But obviously this is just FUD for Bcash anyway. Yeah, I could say that, but yeah, I think that the doublespend.cash site itself is FUD, because ultimately only one version of the transaction ever gets included in a block. Continuing on, Audicas on February 10th of 2020 at 7:09 a.m. says, your description of how zero-conf works and what merchants should do displays a gross misunderstanding of how zero-conf works, which can be done in a secure manner. Instead, you're advocating for Lightning Network, which will end up fully custodial, expensive to join, unless joining together in factory channels. Yes, that's been my assertion pretty much the whole time. The whole thing is so complex that they have no idea where it will stop scaling, and they don't even know if Lightning nodes are legal, when it is clear the Lightning Network hides transactions. Besides, that it sits like a parasite on top of BTC, removing TXV reward away from the main chain, making it unsustainable for the future as block subsidy reward dies out. Whilst chains that do scale on-chain and allow unbounded utility, block size will eventually win the protocol war as it's frictionless, a free market, and allows thousands of use cases to be done that drive massive amounts of microtransaction reward. As soon as there is enterprise adoption, which already is happening, BTC is functionally dead in the water. BTC is an altcoin that, through trickery and lies, hijacked the protocol, gave Satoshi the middle finger, and kept the Bitcoin name. Yeah, that's pretty accurate. Steven Zeller on February 10th, 2020, 7:40 a.m. says, there is a solution to this problem. The Payment Protocol Online in Bitcoin Improvement Proposal 70, That protocol helps ensure BTC payments are not potentially fraudulent and conform to all merchant requirements. Unfortunately for BTC, their core developers removed support for the payment protocol this year, and other wallets followed suit. That's interesting. Steven Zeeler on February 10th, 2020 at 7:41 a.m. says, Rob A sounds painfully invested in a coin that stinks for payments. Heavy bags keeping your eyes shut, bro. Steven Zeeler on February 10th at 7:43 says, same one. HornSolo says, it should be up to the merchant whether or not they accept BTC. Goddamn right. What's the frequency? Kenneth on February 10th says, HornSolo, this isn't about stopping anyone accepting BTC. This is about a service not willingly helping scammers. That's an interesting angle on it. And Jumping Jack says, this is a good article of reference about Bitcoin. The risks that are pointed out are still the risks of today's cryptocurrency. I may get into that. And there's no additional commentary there. There's a little bit of salesmanship on Bitcoin Cash and Dash on this, but they do include a standard Bitcoin wallet on here, so that's cool. But yeah, I've long asserted that I've felt that the Lightning Network path is basically trying to confine people into needing to use payment channels to use Bitcoin instead of just using it as regular payments. Just using it as money. And the problem with that is that you're being forced to do so by transaction fees. That the transaction fees for individual transactions are too expensive. And so you have to do something else in order to make Bitcoin worth spending, or possible to spend, or affordable to spend. And so either A, you have to increase the size of the blocks, which would allow for more transactions to be processed per 10 minutes, and would thus reduce the relative expense of that block space. Or you could do something else, where you do a transaction, you open a payment channel using a transaction on the Bitcoin blockchain for, say, $500 worth of Bitcoin. And you keep that transaction open, but of course you're going to have to pay a transaction fee. So the transaction that you do has to be holding enough of a sum to not only cover that transaction fee, but also the volume that you intend to spend. So let's say Bitcoin transactions have gone back over $20 for the miner fee per transaction. Let's just say that, all right? So that means that you have to put up at least $40 so that you have $20 that you can spend. Now, if you want to have $500 worth on there, you have to put $520. $20 to cover the transaction fee, and then of course the $500 that you intend to be putting on your node. And this is assuming that you're not having to do any other transactions, because from what I understand, it can take several to establish and set up your payment channel. And so now you've got the money on your payment channel, and you can either do it that way, or you can just send your Bitcoin to a wallet like, say, Samurai Wallet or Blue Wallet, and they'll allow you to spend your Bitcoin on the Lightning Network. Basically, I think you just put the money in their wallet, and I'm pretty sure that there's a transaction fee associated with that as well. So you don't really avoid the transaction fee, you just reduce it in relative terms to how many transactions you intend to do. So you're probably going to do, say, $10, $50 transactions with this thing. Okay? And instead of having to pay 10 transaction fees, you just want to pay one transaction fee, or 2 or 3, or however many transaction fees it takes you to set it up. Now, you can go through all that rigmarole and all that trouble, or you could continue to use a different cryptocurrency instead. So say Verge, or Dogecoin, or Litecoin, or Bitcoin Cash, or Ethereum Classic, or Monero. There's thousands of them out there for you to try out and to use and to mine, which has also become less rewarding because of some additional issues within Bitcoin. But yeah, so you're looking at Bitcoin as a way to store and transact monetary value. According to AnyPay, they're saying that according to the foreseeable future, that's a no-go for them. They're probably looking at what they're paying fees for on-chain transactions right now, and they're saying eventually this shit's going to be so fucking expensive that we can't afford to do this, because we're not licensed to do huge ass payment channels where we're going to be hosting the funds of thousands of people. We're not licensed for that. We don't have the capabilities for that, so we can't participate in that. This is a point that's alluded to in this article here, that it basically heightens the barrier of entry for anybody who is wanting to include themselves in something regarding Bitcoin. So being a miner, you have to be quite a big miner for it to be worthwhile for you. If you want to be a payment service provider, you need to pay for licenses. And of course, I'm sure there's some sort of cutoff, in how much they allow you to handle for other people before they come after you. But the idea that they could come after you at all for it is just fucking ridiculous. It was foreseeable, though. And it's one of the reasons why Bitcoin was designed to work the way it was designed to work. And we have altcoins now that work just as well as it did when we first started with Bitcoin. And because of that, I don't really believe over the longer period that Lightning is going to solve jack shit. I think the people that are using it, they're hardcores, and or they have a commercial interest in it. Either they're they hold some fucking Lightning Labs or some Access stock, and so they have a commercial interest in it. But in the longer term, though, their model doesn't benefit the people that would be maintaining the network, i.e. the miners, enough for it to be worthwhile. And again, this is assuming that fees don't really expand and blocks don't get any bigger, Anyway, so as far as what else we got here, I've made multiple statements on multiple predictions on this show, and one of the things that I've always believed about the development of cryptocurrencies is that it's one of those things where you really can't be paid to do it. You have to be investing yourself in it. If you're being paid to do it, it means your incentives are a little bit off, because you're not getting paid directly in it. You're probably getting paid in something else. And so your interests being skewed in such a way, you might deprioritize something that was a fundamental building block of that coin's success. And also because it's not really something that you're being paid in. Let's just get into this article here. I'm kind of falling off the side there, and I want to get straight to it. This is on Reuters.com. Major blockchain developer Coin Consensus announces job losses. And this is by Tom Wilson. London, Reuters. Major blockchain developer Consensus has laid off around 14% of its workforce, it said on Tuesday, a move that comes as companies around the world frantically search for applications for the much-hyped technology. New York-based Consensus is one of the largest specialist blockchain developers to have emerged from the advent of the shared ledger technology, originally conceived of as the basis for the Bitcoin cryptocurrency. Companies from banks to oil traders to retailers and tech vendors, drawn to its promise of making cumbersome processes more efficient and secure, has invested billions as they look to find uses for the technology. Many of them have turned to blockchain development startups in the process for technical expertise. Yet there have so far there have been very few major breakthroughs in the practical application of blockchain, despite the spate of tests and pilots. The restructuring at Consensus will separate its software development business from its venture activities, the company said in a statement. Consensus focuses on the Ethereum blockchain, which underpins the world's number 2 cryptocurrency, Ethereum. The cuts would allow it to be better aligned with the needs of a focused software development company, Consensus said in a statement. A spokeswoman for the company said the job losses would fall in roles across human resources, finance, and marketing, with product teams unaffected. She declined to comment on the number of overall job losses. In December 2018, Consensus cut around 13% of its workforce, which then totaled over 1,000. The firm, which was founded in 2014 and operates in around 30 countries, with major offices in London, Dublin, and Paris. Yeah, all that infrastructure is really fucking expensive. And in all honesty, unless they're miners and really, really good ones, they're probably not making enough money to off of their shit to justify keeping the doors open. And as a matter of fact, I would wager there's a lot of companies like this that they got their start between 2012 and 2014, and they were from the people that had Bitcoin at zero and it went up to like $600 and they sold, and they had thousands of them, so they made millions of dollars. Well, that money runs out. It eventually runs out. And I'll say the same thing for Blockstream. Eventually, there is not going to be enough reward out there for people to even bother. They're not going to be able to participate in the projects they're participating in, make a profit at that, and still have enough money to keep shit like Consensus going. Unless, of course, they have, they're like selling stickers or maybe licensing some software to somebody, or I don't know. I mean, the basic wallet software, the original Bitcoin QT wallet, eliminated the need for your fucking credit card. If somebody had a wallet of their own, they could just scan your fucking QR code and send you money. You could scan their QR code and send them money. No government, no Visa, no MasterCard involved. Just a global network of miners. And we are going to go back to that. And that's pretty much how Bitcoin and other cryptocurrencies will exist for us. I don't believe any of this second layer bullshit is going to go anywhere, except for maybe in the internals of some companies, where they're keeping track of how much Bitcoin they have and circulating it between one another and, of course, their partners on their own mutual payment channels. That's about where I see the application of this shit. But, this idea that we're going to be worshipping any entity as if they are the Visa of crypto, I don't believe that date will ever come. As a matter of fact, I'm starting to see where there's a little lack of concentration on the development of things that will be going with coins. I mean, it's almost like a lot of people out there think, we've already got it set up to where we can kick everybody out and yet keep their interest. And I'm here to tell you that that's just not the case. The only reason people are currently involved is because it is in their interest to retain their involvement, to continue to involve themselves. When it is no longer profitable to do so, they will take the ball elsewhere. Anyway, let's go ahead and throw down with some music. And I got some strapping young lad playing, and I just don't play enough of that. So that's what we're gonna do next. Let's scroll. Strapping young lad, where are ya? Strapping young lad. There we go. I've actually got 2 albums by them on here, but one of them, none of the tracks are ID'd for some fucking reason, and so it's not in there, and I'm not going to play them. Let's go with All Hail the New Flesh by Strapping Young Lad here on Coin Metal. And that was Slayer with Dissident Aggressor. And so, got a whole bunch of tabs open here on my browser. And the next one up I got here is thenextweb.com Moonday Mornings. $4 billion one-coin cryptocurrency scam to be made into a TV drama. Another cryptocurrency scammer jailed and more. Welcome to Moonday Mornings, fellow hard forkers. You know the drill. Let's take a look at this weekend's top cryptocurrency and blockchain headlines. And let's see here. Where's it? Number 1 is OneCoin investigative podcast to be made into a TV drama. If you didn't get enough of the $4 billion OneCoin cryptocurrency scam, then you're in luck. According to an entertainment news website Deadline, the real-life drama is going to be made into a TV show. And I was mistaken in that I assumed that was actually the source of this article, and I was incorrect. And so this is on Deadline.com, and it's by Andreas Wiesman. So yes, penis. And this is authored February 4th, 2020 at 8:40 a.m. New Regency Television International wins screen rights to hit podcast, quote, The Missing Crypto Queen, after heated auction. In a highly competitive situation, New Regency Television International has won screen rights to hit BBC Sounds podcast, The Missing Crypto Queen. The Buzzabout 8-part podcast was downloaded 3.5 million times in 4 months last year and reached number 1 on the UK iTunes charts. The pod delves into the remarkable and ongoing saga of Bulgarian entrepreneur Dr. Ruja Ignatova, who in 2014 launched a cryptocurrency called OneCoin. Ignatova set out to rival Bitcoin and hooked investors from 175 countries to the tune of $4 billion. But OneCoin was in fact an enormous scam fueled by a multi-level marketing scheme. Ignatova disappeared in October 2017 and hasn't been seen since. Ignatova's brother recently pleaded guilty to several counts of fraud in a U.S. court, while her American lawyer was found guilty of laundering $400 million of the money raised by OneCoin in the U.S. New Regency, which we understand beat out a host of suitors, including A24 and 20th Century TV, will produce the adaptation alongside executive producers and consultants Jamie Bartlett and Georgia Catt, co-writers of the podcast. The producer-financier is in talks with writers and directors with the intention of setting the project as a multi-episodic drama. Ed Rubin and Emma Broughton will run point for New Regency Television International, which launched in London early last year. This marks the international division's first announced acquisition. Let me check something out here really quick. Apparently my software is glitching just a tad. Let me get back to this thing here. Rubin, head of television at New Regency, said, quote, "The missing crypto queen makes for compulsive listening, as each week the extraordinary details play out like the most gripping drama. Jamie and Georgia have also brilliantly captured a story about the dark side of rapid technological change and how people can be duped on a massive scale. This is a cautionary tale that needed to be brought into mainstream consciousness. It's a world-traversing story of corruption, jeopardy, and deception, combined with the twists and turns, complex mystery, and global reach of the scandal. We're excited to bring it to life on screen." Added New Regency chairman Yariv Milchin, "The missing crypto queen is the type of content that fits New Regency's strategy to tell meaningful stories that showcase up-and-coming creative talent as well as the work of established artists." The podcast was commissioned by BBC Sounds and is part of a wider push into the podcast space by the broadcaster in recent years. Jason Phillips was the commissioning editor. Another Bartlett's TED Talk, "How the Mysterious Darknet is Going Mainstream," has been viewed almost 5 million times. In 2017, he presented the two-part BBC Two documentary, "The Secrets of Silicon Valley." Producer Catt's audio credits include "The Untold Missing Young British and Imam in Training" and "Anti-Capitalist and Uber Establishment." Yeah, interesting. So I was involved in the crypto space back then, and so as a matter of fact, I don't know, it seems like that was about the same time that I did kind of fall into crypto Twitter, and I'm trying to see if there's any comments on this thing. I don't think there are any, though. Yeah, there's no comments on this thing yet. Interesting. But yeah, so it's good that this kind of media does come out and does expose people to cryptocurrencies in a way that does demonstrate that yes, there's plenty of fucking risk involved. It's not, it's not something that there's any guarantee. And as a matter of fact, just because a federal entity or a state entity may have something to say about cryptocurrencies or may say something about cryptocurrencies, the effect of what they say or what they're trying to enforce on the market at large, there's just a disconnect there. It's just a disconnect. And, so things like OneCoin, I'd really like it if there was more effort put towards exposing people to the fact that these scams exist. There are people still out there today involved in scams, and some of them are just longer term than others. I've watched scams that lasted multiple years before shit really caught up to anybody and was brought to account. It's sad, but it's going to happen. This is money after all. We're talking about money. And I hate to say it, but a lot of the articles that we read on this show, they're to some extent disinformation on one angle or another, whether it's just the technical bias of the author, which we've already covered. They were obviously BCH fans, and whatever, what are you going to do? Nothing. But everybody's got their own interests, and fortunately this is a space big enough for people to express their interests in. And we're more than capable of doing so legitimately and actually making good. And this is the part that disappoints me so much about people that commit scams in cryptocurrencies, is that it really doesn't take all that much to deliver. All you have to do is make a network that people are able to transact monetary value from one person to another, regardless of where they're located. We managed that with Bitcoin by 2012 pretty successfully. I mean, sure, the GUIs for a lot of this stuff looks like crap, but who cares? Does the shit work? Does it work as the white paper says it's supposed to work? At that point, it did. And I think to some extent it still does. It's just more expensive to get it to work the way it's supposed to. But I think that we're going to see the vision of Bitcoin come back as it was supposed to be. Because ultimately it will prove to be more profitable to play according to the rules, as it already has proven to be better to play by the rules than to game some part of the system. It's like when I started hearing people talk about realigning the incentive structure for Bitcoin, I'm just like, okay, no, you people do not understand. It's built the way that it's built so that you can participate in it and not need a third party. And if you start shifting the incentives around just to create the necessity of having a third party involved in the transactions, invariably you are going to fall behind any project that didn't. And there are thousands of them out there. Ultimately, I believe they will win the day. The whole idea of maximalism and stuff, I think it's just people mistaking the idea of Bitcoin. They think that they're supposed to worship it like they did their fiat currency until it proved to not fit up to the reputation of the idol. That's what it is. It's a symbol, an idol. And if it doesn't do what it's supposed to do, and Bitcoin does it better, then you're going to use Bitcoin. But if Bitcoin doesn't do it better than other options available to you, why would you continue to use Bitcoin? You could just as easily use an altcoin. So yeah, and it's the same thing that we're talking about when a consensus. They're trying to maintain this organization and whatnot. And what the fuck are they giving? I mean, what are they giving anybody that they could be adequately compensated for that's worth their time to do in something that doesn't actually require their participation in the way that they're participating? It doesn't need Bitcoin doesn't need people to write more software for it. What Bitcoin needs is more people dedicating hardware, bandwidth, and electricity to it. Anyway. So this next thing I got here, I find this really interesting because this is the one place I would really, really want any kind of regulator looking in cryptocurrencies. If there was like one thing that I could just you put it up on a big old chalkboard with like 20 billion other things that I could point to and say, yeah, regulator, take care of that shit. This is the one fucking thing that I would pick out, because it is the only place I believe that any government entity has anything to say about it, and it's because of what these particular type of tokens represent. And so this is on bncrypto.com. Tether mints 25 million USDT as exchanges see deposits increase to, quote, buy the Bitcoin dip. And this is by Anton Lucian. My apologies, sir. And going by the name, I'm going to say yes, penis. And this is authored on February 10th, 2020 at 1723 UTC. Today has been a busy day for the whales in the cryptocurrency market. There's been a significant increase in exchange deposits across the board. Could major players be buying the Bitcoin dip? Bitcoin is once again dropped below the $10,000 price point, and it looks like major players in the market are using the opportunity to accumulate further. Whale Alert is reporting on a large number of deposits across many different exchanges. Let's see here. One is the first tweet is from Whale Alert. It's 25 million USDT. Actually, it's 24,946,708 USD transferred from Tether Treasury to Bitfinex. And it gives us a little transaction ID so we can look it up on our own. Let's see. And then the next one is for 1,069 Bitcoin, or let's see, $10,529, or I'm sorry, $10,529,479 transferred from unknown wallet to Binance. Major deposits recorded across most significant cryptocurrency exchanges. All of these deposits happened just today, as per Whale Alert. 1,069 Bitcoin was deposited to Binance. 3 deposits were made to Coinbase today. 700 Bitcoin, worth $6.8 million. 708 Bitcoin, worth $6.9 million. And 710 Bitcoin, worth $7 million. And then the next one is 551 Bitcoin, approximately worth $5.4 million, was deposited at Bitstamp. Huobi saw 3 major deposits of USDT, 9,999,940 USDT, 4,999,950 USDT, and 5 million USDT. These are just a few of the major deposits recorded today across the major exchanges. However, Tether Treasury also decided to conduct a major chain swap where 26 million USDT was minted on the Tron TRX blockchain. Tron has seen the number of USDT on its network rise substantially in 2019, and it seems to be continuing in 2020. In December, Justin Sun celebrated $916 million USDT on Tron, and it is currently close to reaching $1 billion. By the Bitcoin dip, the uptick in deposits across the many exchanges seems to be an indication that major players are buying the dip. Bitcoin is currently once again trading under $10,000, which may be an enticing buy for some big whales. However, not everyone is convinced this is a buying opportunity. One whale, Joe 007, believes that the market is currently, quote, inflated and has a long way still to fall. As PN Crypto has previously reported, there is this belief that the market is currently made up of, quote, phantom money, which is artificially inflating prices. Whether or not such speculation is correct remains to be seen. Still, one cannot disagree that the fundamentals for Bitcoin and the rest of the cryptocurrency market look strong. In fact, on-chain metrics point toward a significant increase in investor activity, which preceded Bitcoin's rally past $10,000. This seems to suggest that this rally is legitimate, and it seems that many whales agree, which is why they are depositing funds en masse today. Yeah, it's a really volatile world out there, and this kind of thing. Oh, let me see what this 10,000 breakout. Oh, here we go. This is kind of interesting, and this is on bncrypto.com too. Bitcoin's $10,000 breakout is backed by a notable increase in investment activity. And this is by Anton Lucian. So yes, penis. February 10th, 2020 at 3:10 UTC. According to on-chain investor activity, Bitcoin's breakout above $10,000 is being pushed by a serious increase in demand. Many are doubting Bitcoin's most recent push above $10,000, but on-chain metrics, which we're going to right-click right now because it's a hyperlink, show that this might be just the beginning. Although the top cryptocurrency also saw a drastic rise above $10,000 last summer and reached a high of around $13,000 by late June, this time around looks much different. According to Willy Woo, on-chain metrics show that, quote, this breakout is the real deal. Investor velocity, those that buy and hold, has increased during the same time that Bitcoin's price broke above $10,000. This same metric was widely used to predict the top last summer, but this time the data is pointing more bullish. And let's see, Willy Woo put up a tweet. This breakout is the real deal. Fundamental investment activity is backing this $10,000 breakout. On-chain activity is perhaps the most fundamental means which we can judge price movements. Based on buying activity and the number of holders, it would be difficult to argue that this is the top. In fact, the number of holders has been increasing for the past year. BN Crypto reported last month that 12.6 million Bitcoin has not moved at all in the past 12 months. Clearly, Bitcoin has a growing number of dedicated investors. These fundamentals are lining up well for Bitcoin's third halving, expected to take place in May of this year. Long awaited, it will make Bitcoin twice as scarce as before, and is usually followed by a significantly positive price movement. During the last halving events and the 4-year cycle that followed, Bitcoin rallied 13,378% and 12,160% respectively. If these historical trends are followed again, we could see Bitcoin reach as high as $400,000 after halving. However, past events are not predictors of future events, so investors should be cautious of such calls. Investors will have to keep a close eye on Bitcoin's on-chain metrics in the next few months. If demand and buying activity continues to rise, we might see Bitcoin slowly build momentum up until its halving event and then beyond. So far, the forecast for 2020 looks great for Bitcoin. Yeah. Let's see if there's any comments on this. No, there are not. I think it's really interesting that more people are seeming to pay attention to the halving this time, although there hasn't really been like what I would consider to be a commensurate demand increase for it, or for Bitcoin. And I think that, between stable coins, ICOs, altcoins, and a few other distractions, I think that people's value ideals concerning Bitcoin have fluctuated a little bit. It's no longer the only legitimate game in town, as evidenced by the fact that there are several altcoins that have lasted for years and have had a continuously active network for 5-6 years now. And that's something that is relatively rare. I mean, you've got Bitcoin, and then I think if you go through the like chronology of all of the different bursts of coins, and somebody actually did that and made a visual representation of it. But I mean, if you were to look at it, there's several coins now that you've got Bitcoin, and then I think there's like a spatter of like 4 or 5 coins, and then there's a spatter of like 100 coins and 200 coins, and then that one there was this increase between 2012 and I would say 2015 that has since been unprecedented. I've yet to see the market be that active in new coins coming into existence. That's how OneCoin was able to suck so many people in, is because it was one of the first ICOs of its type, and BitConnect was, I would say, probably a cheap knockoff of it. But they were able to get around to a lot of people, because of the internet, and because of the interest growing behind Bitcoin and other cryptocurrency projects. And so it was kind of easy to latch onto something that was already moving like that. But the volume of live projects, I would say maybe 1 out of 4 is on any exchange right now. That there's several coins that have been delisted from some exchanges, and they didn't have enough activity, they weren't getting enough trade volume, whatever. But they don't just go out of existence. They go to lesser exchanges. But they're still live. And that's something important to keep in mind, is that it might not be profitable enough for some to participate in, but as long as there's somebody out there that's willing to hold it, willing to transact in it, it'll stay live. And there's not really anything anybody can do about that. Anyway, I got this one more article, and we're going to jump back to music. And this one's on Cointelegraph, and it's by Marie Hewlett. FinCEN, social media crypto projects can't ignore money laundering risk. Yes, they can. The Deputy Director of the United States Financial Crimes Enforcement Network, FinCEN, says the cryptocurrency sector must not abet, quote, slide backward into money laundering prevention. FinCEN Deputy Director Jamal El-Hindi made his remarks during a speech at the Securities Industry and Financial Markets Association 20th Anti-Money Laundering and Financial Crimes Conference in New York City on February 6th. FinCEN won't allow AML oversight to slide backward. Bullshit. El-Hindi opened his speech noting the particular complexity of the securities and futures industry, which comprises a dense web of transactions and interactions between interrelated parties. This, quote, amazingly complex landscape includes but is not limited to primary brokerages, futures commission merchants, executing dealers, transfer agents, clearings firms, and mutual funds, he observed. This complexity, he suggested, presents a challenge to the transparency, the information collected, and due diligence processes needed to tackle money laundering and prevent financial crimes. In many cases, information sharing and know your customer processes may be discouraged due to the highly competitive nature of the industry. Just 14% of all entities in the security sectors that are eligible to register for one of the key business-to-business information sharing mechanisms choose to do so, he noted. Within this highly challenging climate, El Hindi warned the new technologies may further exacerbate the situation. Goddamn right they will. Cryptocurrency curious social media and messaging platforms, the most high-profile of which is Facebook's Libra project, must meet same compliance responsibilities as traditional financial sector actors, he stressed. Quote, social media and messaging platforms and others now focusing on the establishment of cryptocurrencies cannot turn a blind eye to illicit transactions that they may be fostering. Goddamn right they can. The influence of these private sector actors and the new technology heralded by cryptocurrencies carries these same responsibilities back into traditional finance. Quote, to the extent that the financial sector chooses to move forward with these emergent systems, we are not going to allow it to slide backward on the protections and appropriate transparency that we have collectively worked so hard to weave into the financial system. Steps forward. In early December, FinCEN's director, Kenneth A. Blanco, claimed that the cryptocurrency industry has increasingly begun to fall in line with the agency's regulations on money transmission services. In particular, he pointed to FinCEN's May 2019 guidance as having a marked and positive effect or impact on the agency's oversight of the crypto space. Yeah, in other words, they convinced enough people that they matter and that anything they have to say should mean anything to you. To keep their doors open, and that'll probably continue for a little while. But we're noting this drop off in supposed infrastructure developers. Consensus. They've been around for quite a while, but the fact that they're having to lay off so many people tells you that they're carrying around a lot of cruft. They're carrying around a lot of dead weight, people they never needed. And as a matter of fact, they themselves are not needed. It should be up to all of us what kind of BIPs are presented, and it should be up to all of us, or those of us who choose to involve ourselves, as to how we are going to involve ourselves. I think that FinCEN is overstepping their mandate by trying to say anything otherwise. And I would say the same for pretty much any federal or international entity or whatever. I don't think that they have the right to tell you how to transact your coin. I just don't think so. Anyway, let's go ahead and throw down with some music. And Slipknot. I think did I play any Slipknot? Oh no, I did. Okay, damn it. Can't play it now because we already played some. But fortunately for everybody, I got plenty of good stuff in here. Let's go with a little bit of Skindred, Nobody, here on Coin Metal. And that was Probot with the Emerald Law. And so, let's see here. Yeah, unfortunately we've run out of time for the evening. But we'll be back again on Friday. We're going to skip Wednesday this week, most likely. I have something coming up on Wednesday that I got to attend to, and so the likelihood that I'm going to be able to get in here to do the show on Wednesday is kind of slim. It may happen. I doubt it, though. Like I said, I'm pretty firm on this one. I think I do have a little bit of a schedule conflict on Wednesday, but we will be back on Friday at 8 p.m. Pacific Standard Time. And so until then, I want y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. And as far as our last dance is concerned, I had not picked anything out. Well, actually, that's kind of a lie. I did think of one that I wanted to play, because I have not played anything by Meshuggah the entire show. And so we're due. We're just due. And so here it is. Glints Collide. Last Dance here on Coin Metal. Thank you again for listening, and you all have an excellent evening. Good night.